Hello, welcome to another episode of Transitions. I'm Bobbi Sondreal, a succession and retirement planning consultant with Egg Country. Today we're going to focus on the rules surrounding gifting. We use gifting as a tool for a number of items when we're doing our transition or our estate plan, but we want to make sure that we understand the rules. When is gifting used? Oftentimes gifting is used in a machinery and equipment transition between senior farmer and junior farmer. Senior farmer may elect to gift some or all of the machinery to junior farmer to transition it in the most tax efficient way possible. Secondly, sometimes gifting is used in entity transition. Let's say senior farmer farms through a corporation. Sometimes that corporation is transitioned over time through the use of gifting. Senior farmer can gift shares of that corporation to slowly bring junior farmer into business with them. Sometimes we use gifting to shrink the size of the estate. Let's say you gift a quarter of land today. This is now out of your estate, and any future appreciation of the value of that land is not increasing the size of your estate when you pass. Also, gifting is used for nursing home planning. If we're trying to protect assets, if we were to go into the nursing home and need to apply for assistance, sometimes gifting is used. I will note, in that instance, there is a 60-month look-back period in which Medicaid will want you to disclose any gifts that were made in the past 60 months prior to applying for medical assistance. The gifting rules for 2021 are that the annual exemption amount is $15,000. This means you can give $15,000 to anyone you want and as many people as you want without paying tax or without reporting it to the IRS. If you are married, $30,000 could be given. You could use your exemption and your spouse's annual exemption. If you're giving to your child and they're married, you could include their spouse in that gift and essentially give $60,000 tax-free and not have to report that to the IRS. The lifetime exemption amount for 2021 is $11,700,000 per person. So that's $23,400,000 as a married couple. If you gift over that annual exemption amount as previously discussed, you need to report this to the IRS on Form 709, and you will use up some of your lifetime exemption. This amount is coupled with your estate tax exemption. You don't get two exemptions. You either can use this during lifetime through gifting, or it's available to you to use at death. This is the example that we'll use. Let's say we have $315,000 worth of machinery and we want to gift it to our child. We can apply the first $15,000 to the annual exemption amount, which we do not need to report to the IRS. However, we're $300,000 over our limit to gift annually without filing. Like I said, a gift tax return, which is IRS Form 709, is filed, and the $300,000 is subtracted from our $11,700,000, and now our estate and gift tax exemption is reduced to $11,400,000. No tax is due, but we need to report it and let the IRS know that we went over our limit in that year. States have their own set of gifting rules as well. North Dakota and Wisconsin do not have a state gift tax. They're coupled with the federal tax, so you do follow the same rules that we just talked about on the estate tax exemption, but there's no specific separate state gift tax. Minnesota does not have a state gift tax, but they do have a catch. If you gift and you die within 3 years of that gift's clawed back into your estate for purposes of calculating your gross estate for estate tax purposes. So we just want to be mindful of the timing of gifting and the rules that surround that. We can use this as a tool in our transition and estate planning. We want to make sure that we are complying with all of the rules that the IRS has set. If you have any questions, please feel free to reach out. Thank you and have a great day.